Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are generally flat today. Nasdaq is up zero point 0.3. Everything else is pretty much unchanged. You can see Apple is up 4%. Tesla is about up just below 4%. Oracle is up as well. Everything else is pretty mixed. Healthcare is up slightly. Other tech stocks are down a little bit. Crude oil is down 0.3% to $62 per barrel. That's pretty low. And on top of that, yield curve is up about a basis, 2 basis points. 30-year treasury yield is at 4.78. 10-year treasury is up 4.15%. Let's go on to the article of the day. S&P 500 and Nasdaq subdued after rally. Trump's visa crackdown weighs. The S&P 500 and Nasdaq were subdued on Monday after rallying to record highs in the previous session, while uncertainty around President Trump's visa policies also dimmed sentiment. The Trump administration said on Friday it would ask companies to pay $100,000 per year for H-1B working visas, prompting some big tech companies and banks to warn employees to stay in the U.S. or quickly return. Tech companies, including Microsoft and Amazon, slipped as they heavily reliant on skilled workers from India and China. Microsoft weighed on the blue chip Dow. Companies such as Cognizant Technology Solutions, Intel, and JP Morgan, which rank among the biggest sponsors of H-1B visas, paired most of their pre-market declines. Quote, the fees and the recent visa-related news follow point to an environment that's getting incrementally stringent and could hurt the sentiment, and quote, Tian-Sin Huang, JP Morgan equity analyst, said in a note. However, Apple gained 2.4% after Wedbush raised its target price on the company on strong demand signs for the iPhone 17. Tesla and Apple both hit over an 8-month high, which with gains boosting the S&P 500 technology and consumer discretionary sectors. They also lifted the Nasdaq to a record high. The Federal Reserve's indications of more interest rates cuts after its first in 2025 last week added to Wall Street's recent rally, with the S&P 500 and Nasdaq logging their third consecutive week of gains. Wall Street's three main indices are in the positive territory so far in September, a month deemed historically bad for U.S. equities, where the S&P 500 has shed 1.4% on average in the month since 2000, according to data compiled by LSEG. Numerous data sets are scheduled for release this week, including that for personal consumption expenditure, the Fed's preferred gauge of inflation, and gross domestic product. CanView fell 6% to the bottom of the S&P 500 ahead of the Trump administration's announcement about its autism findings. A report earlier this month said that the Trump administration planned to announce that use of CanView's pain medication, Tylenol, by pregnant women is potentially linked to autism. Pfizer said it would acquire weight loss drug developer Metsera in a deal valued up to 7.3 billion. Shares of Pfizer rose 3.1%, while Metsera soared 62%. Compass fell 8% after the brokerage firm entered an agreement to acquire rival Anywhere Real Estate in an all-stock deal valued at $4.2 billion. Anywhere's shares were up 58%. Fox Corp gained 2.6% after a report said the media company's top boss was eyeing a stake in TikTok. Let's move on to Bitcoin. New rout in Bitcoin ripples through crypto world today. Nearly all crypto assets are seeing red on Monday morning, with the total market capitalization for all crypto assets falling below $4 trillion since Sunday evening. Bitcoin fell 3%. The second largest cryptocurrency, Ether, fell 6%. Solana token is down 7%. Dogecoin and World River Financial are each down 10%. Over Sunday night, a total of $1.7 billion in trading positions in the crypto derivatives markets were liquidated, according to data provider CoinGlass. Of those positions, 94% came from bullish trades, with the single largest whip out valued at $12.7 million occurring on crypto exchange OKX. Traders taking bullish bets on Ether have seen over $500 million in liquidations, while those gambling on Bitcoin have seen $280 million taken out, according to CoinGlass. Crypto assets sold off last week following the Fed's well-telegraphed signal that it would lower its short-term policy rate by 1/4 percentage point. Companies holding Bitcoin and other digital assets, so-called crypto treasury companies, have faced pressure in recent weeks after seeing wild stock surges earlier in this year. There are now more than 180 public companies that have added Bitcoin to their balance sheets to date, according to data provider BitcoinTreasuries.net. Many have launched over the past year in order to replicate the outsized stock performance of Michael Saylor's Bitcoin giant strategy. Strategy's stock is down 1.3%. The company piled into a bet on Bitcoin starting in 2020 using a combination of debt and equity to fund massive purchases of the cryptocurrency that turned the business intelligence software firm into a Bitcoin juggernaut. Despite lagging recently, the stock has seen a surge of 2,200% since it first started buying Bitcoin. Of those firms, some 94 are considered imitators of strategy based on their size, business model, and how they fund their Bitcoin purchases, according to Vetle Londe, head of researcher for Oslo, Norway-based crypto market research firm K33. Roughly 25% have market capitalizations that have sagged below the value of their Bitcoin holdings, according to K33 research. The dynamic prompted the first merger with the Bitcoin treasury space. On Monday, the stock of health tech firm turned Bitcoin treasury company Semler Scientific rose 27% following the announcement that it had reached an agreement to be acquired by a larger Bitcoin treasury company, the Vivek Ramaswamy's backed Strive Inc. through an all-stock merger. Wild times in crypto world. Let's move on to Trump. How Trump alarmed and tried to calm CEOs with his new $100,000 H-1B visa fee. It was a roller coaster weekend for businesses trying to understand how they would be impacted by President Trump's proclamation mandating $100,000 fee on visas for skilled foreign workers. The executive order focused on H-1B visas was unveiled and signed after markets closed on Friday. Statements from the Oval Office that evening then led to a weekend of scrambling to figure out how it might change the lives of an estimated 730,000 holders of this type of temporary non-immigrant visa. Commerce Secretary Howard Lutnick, standing beside Trump on Friday, even described the order's overall goal as making this widely relied upon visa not economic in nearly all instances. But then, as the confusion mounted, Trump's team offered an apparent 180-degree turn on key specifics, such as whether this fee will be annual or whether it will be paid by existing visa holders. The final effects are still coming into focus, but the changing messaging over the weekend appears to have calmed many fears. Markets opened Monday morning with the tech sector and industry heavily reliant on this visa program, even up slightly. The effect was more evident on the stock prices of some Indian companies in a reflection of data that showed the majority of H-1B visa holders are from the subcontinent. The declines were most notable among Indian information technology companies. A possible bottom line amid the noise came from Terry Haynes of Pangea Policy, who noted Sunday night in a note to clients that these visa rules are likely to remain, quote, murky for months, adding that the large context for tech at least is blip compared to many tech positives. But it's clearly going to be an ongoing issue with a range of top companies from Google to Amazon to Walmart to JP Morgan, each sponsoring thousands of these visas according to U.S. Citizenship and Immigration Services. Two key areas of confusion. The confusion over the weekend centered around two specifics of the order, whether this new fee would be annual and whether it would apply to existing visa holders. The message from Trump's team on Friday in the Oval Office appeared to be a definitive yes on both accounts. White House Staff Secretary William Scharf handed Trump the order, calling the H-1B program abused and explaining that what this proclamation will do is raise the fee that companies pay to sponsor H-1B applicants to $100,000. The current H-1B visa program includes a range of much smaller fees, some of which are paid initially and some that must be paid annually on a repeating basis. What a shit show. Let's move on to Oracle stock rises as White House names software giant in TikTok deal. Company announces CEO shakeup. Oracle stock rose 3% on Monday as the White House confirmed that the software giant is part of a consortium of investors that will control TikTok's U.S. operations. The company also separately announced a CEO shakeup. On Monday morning, a senior White House official confirmed the details of the TikTok deal to reporters, including most notably that the deal will move TikTok U.S. operations into a new joint venture based in the United States, and the American investors in control with a majority of the ownership stake and of the board. Oracle and venture private equity firm Silver Lake are set to lead the new venture with China-based ByteDance holding less than 20% of the equity in Final Venture. Moving on to gold. Gold is up more than 40% in 2025, on pace for its best year since 1979. Gold prices rose to a new record on Monday, putting the precious metal on pace for its largest annual gain in more than 45 years. Gold futures surged to around 3,750, while the bullion made immediate delivery traded above 3,700 per ounce. The precious metal is up more than 40% year to date, marking its best year since 1979, according to research compiled by Carson Group. Gold's monster run this year has been partly driven by expectations of a Fed easing cycle, which started last week when policymakers cut interest rates by 25 basis points and signaled two more reductions in 2025. Moving on to Target. Target expanding next day delivery to top 35 cities. Target is expanding next day delivery for online orders of the 35 top US metropolitan areas as it looks to better compete with Walmart, Amazon, and other retailers. The company said last week that the faster service option will be available in those markets, including Cleveland, Orlando, Florida, and Pittsburgh by the end of October. The rollout comes ahead of the busy holiday shopping season. The nation's eighth largest retailer by revenue said it plans to expand next day delivery to more than 20 areas next year as it continues to renovating stores to be mini fulfillment centers. Next day delivery is fee for orders over $35 with no minimum order amount if a person is a Target Circle 360 member or uses Target credit card for purchases. We talked about the Trump's $100,000 H-1B fee fuels stress for staff employers. It was endless, and I think it's a bad idea for the long term of the country, for really everyone involved. But what are you going to do? Trump's visa shock strains India-U.S. ties, clouds trade talks. President Trump's move to curb skilled visas for foreigners adds a fresh blow to U.S.-India ties that only last week appeared to be on the mend, creating new hurdles for a speedy trade deal. Trump's $100,000 fee for new H-1B applications will predominantly affect Indians, who've made more than 70% of the visas in the past. U.S. President's order has rattled India's $280 billion tech services industry, threatening their business outsourcing models and putting thousands of jobs at risk. Trump has upended decades of U.S. diplomacy by slapping 50% tariffs on Indian exports in August, part of which is to penalize the country for buying oil from Russia. Tensions appeared to ease last week when trade talks resumed and Trump called Prime Minister Narendra Modi on his birthday. The abrupt move to curtail immigration puts that detente in doubt. This is a big nail in the coffin for India-U.S. relations, said Biswajit Dar, a professor at the Council for Social Development, a New Delhi-based research institute. Quote, a $100,000 fee is like a non-tariff barrier equivalent in services sector and is aimed at blocking out Indian professionals, dealing a body blow to the relationship. Moving on to Meta. Meta's AI system, Llama, approved for use by U.S. government agencies. U.S. government agencies will be able to use Meta Platform's AI system Llama, a senior administration official said, as the Trump administration pushes to integrate commercial AI tools into government operations. The General Services Administration, the government's purchasing arm, will add Llama to its list of approved AI tools for federal agencies, said Josh Greenbaum, the GSA's procurement lead, in an interview ahead of announcing the initiative. Agencies will then be able to experiment with Llama, a free tool, with GSA's assurance that it meets the government's security and legal standards. Llama is a large language model capable of processing data, including text, video, images, and audio. Moving on to Google News. Google seeks to avoid ad tech breakup as antitrust trial begins. Alphabet's Google will seek to avoid a forced sale of part of its online advertising business in its latest face-off with U.S. antitrust enforcers at the trial starting on Monday in Alexandria, Virginia. The trial is the government's next best shot at curbing what the judge has ruled in Google's monopoly power after losing a separate bid to make Google sell its Chrome browser earlier this month. Online publishers and rival ad tech developers, some of whom have separately sued Google for damages, will be watching the case closely. The U.S. Department of Justice and the coalition of states are seeking to make Google sell its ad exchange, AdX, while online publishers pay Google a 20% fee to sell ads in auctions that happen instantly when users load websites. The government also seeks to require Google to make the mechanism that decides the winner of those auctions open source. The U.S. District Judge Leon Brinkema who will preside over the trial, ruled in April that Google holds unlawful monopolies in web advertising technology. After this week's trial, she will decide what remedies to impose on the company. Moving on to NVIDIA. NVIDIA and Abu Dhabi Institute launch joint AI and robotics lab in UAE. Abu Dhabi's Technology Innovation Institute and NVIDIA have launched a joint research lab in the UAE that will focus on developing next generation AI models and robotics platforms, T2 said on Monday. The Joint Research Hub is the first NVIDIA AI technology center in the Middle East. T2 said in a statement, combining its multidisciplinary research with the US company's AI models and computing power, which are fueling a global AI boom. Under the agreement, the institute will be able to use specific edge GPUs chips to advance its research on robotics, among other areas, said Najwa Araj, the CEO of the company, which is working on humanoids, four-legged robots, and robotic arms. Warren Buffett's Berkshire Hathaway exits China's BYD, filing shows. Warren Buffett's Berkshire Hathaway has fully exited Chinese automaker BYD, a filing show ending a 17-year investment that grew over 20-fold in value in that period. Incredible. The filing by Berkshire's energy subsidiary recorded the value of its BYD investment as zero as of the end of March, down from $415 million at the end of 2024. Buffett's company began investing in the Shenzhen-based BYD in 2008 on the advice of Charlie Munger, when it paid $230 million for about 225 million shares, equivalent to a 10% stake at the time. It began selling those shares in 2022 after BYD's share price had risen more than 20-fold. Musk's robotaxi plans for San Francisco alarmed, confused regulators, emails show. Tesla CEO Elon Musk tantalized investors in July with a robotaxi update. After small-scale tests in Austin, Texas, Tesla would rapidly expand driverless cabs to markets including San Francisco Bay Area, where it was getting the regulatory permission to launch. Quote, getting the regulatory permission to launch, end quote. Musk posted on X earlier that month that Tesla would deploy robotaxis where probably in a month or two. Bullshit. I called the bullshit at the time too. The reality of Tesla's San Francisco plans did not include driverless taxis at all. The automaker had not applied for the needed permits, a process that can take years of testing under state oversight. Instead, it planned pre-arranged trips in human-driven vehicles only for riders who received an invitation. And it would do this under a permit that is typically used for limousines and does not allow on-demand ride-hailing, according to state officials. News of Tesla's robotaxi plans surprised and alarmed regulators, according to emails among California and federal officials and Tesla public policy staffer, which Reuters obtained through a public records request. After a media report that Tesla would deploy Bay Area robotaxis in late July, a senior state transportation official asked Tesla employee whether the company would clear up the public confusion. The staffer did not directly respond, saying only that Tesla does not answer media inquiries and the customers would receive information when available. The following month, Musk posted on X that, quote, Tesla robotaxi service is already larger than any competitors in Austin and the Bay Area, end quote. Musk and Tesla did not respond to requests for comment on the story. A spokesperson for the California Public Utilities Commission, which regulates autonomous ride-hailing, said Tesla is required to properly and accurately describe its service and ensure its communications provide a clear distinction between its human-driven operations in California and autonomous ride-hailing it offers elsewhere. Tesla's still unproven robotaxis underpin its $1 trillion plus stock market value and the eye-popping compensation package Tesla's board of directors has proposed for Musk, which offers him potentially hundreds of billions of dollars in the company's stock tied to performance targets. Musk has promised the imminent arrival of robotaxis every year for a decade. So far, however, the EV maker has launched only the small-scale Austin test with a limited number of riders and human safety monitors in the front passenger seat. On the July earnings call, Musk said Tesla had made demonstrable progress on autonomous driving that a lot of naysayers said we would not achieve. Quote, we've done what we said we were going to do, end quote, he said. Quote, doesn't mean we're always on time, but we get it done and our naysayers are sitting there with egg on their face, end quote, which is all bullshit. Now, Musk's promises are getting bigger as billionaire CEO faces a November shareholder vote on his compensation and increased pressure to deliver robotaxis as Tesla's EV business declines. Musk told investors in July that robotaxis would expand at a hyper-exponential rate, serving half the population of the U.S. by year-end. Meanwhile, as with the Bay Area episode, Musk and Tesla are increasingly using robotaxi to mean something less than a fully driverless cab. A September 13 post on Tesla X account conflated the term the FSD driver assistance feature offered to customers, which require an attentive human driver. Quote, $99 a month to have your own robotaxi, the post read, quoting the FSD subscription price. Matthew Wensley, a professor at New York's Cardozo School of Law who specializes in autonomous vehicles, said Musk's Bay Area claims show how Tesla wants all the benefits of marketing robotaxis and self-driving to customers and investors, but none of the regulatory burden or legal risk of making some of the claims of the government, same claims to the government. Quote, that they don't want to tell regulators they have an automated driving system, end quote, he said, quote, because then they become subject to a lot more regulations in a lot of states, end quote. Tesla started in August on Austin service in June, but has not opened it to the general public. It has started switching the passenger seat safety monitors into the driver's seat on rides that include highways, Tesla said on X. Musk has said Tesla plans near-term expansions in Florida, Nevada, and Arizona, which, like Texas, have fewer regulatory barriers to self-driving vehicles. Tesla secured a certificate this month to test autonomous cars in Nevada, according to state officials, who did not answer questions about whether Tesla has submitted paperwork to operate robotaxis. Tesla on Friday received permission from Arizona to test autonomous vehicles with a safety driver, but is still awaiting approval to test and operate without drivers. Florida does not require specific operating permits. Dan Crowley, portfolio manager at Nightwing Capital, a Tesla investor, said it does not matter if Tesla hits every one of the Musk's notoriously optimistic timelines, as long as it ultimately delivers a transformational product. Still, he said, investors could eventually lose patience. Quote, if we're at the same place in 2 years, end quote, he said, I wouldn't be ecstatic. Regulators caught off guard. News of Tesla's Bay Area robotaxi plans unsettled regulators at the California State Transportation Agency and the National Highway Traffic Safety Administration, NHTSA, according to the emails exchanged on July 25, which were seen by Reuters. Quote, did your team meet with Tesla and discuss this weekend rollout? Wrote Kareem Habib, a NHTSA investigator, to California officials. A state staffer responded that Tesla did not have the required permits. Emily Warren, a state deputy transportation secretary, emailed the Tesla public policy staffer and top officials at 2 other state agencies overseeing autonomous vehicles, citing concern over public misconceptions about Tesla's Bay Area plans. Tesla policy employee Noelina Derrickson said in an email reply that the company had informed California Public Utilities Commission that it planned rides for Tesla employees, family, and friends in non-autonomous vehicles. Warren pressed Derrickson on how information about the robotaxi service had reached the public and suggested it might have stemmed from a misinterpretation of recent Tesla statements to staff and the public. Warren asked, do you have plans to publicly clarify the nature of Tesla's expanding Bay Area operations to dispel the confusion? Tesla Derrickson did not directly answer, but said, quote, as a general policy, Tesla does not respond to press inquiries, adding that the customers would receive information about Tesla's ride-hailing operations when they become available. Derrickson did not respond to requests for comment. What a shame. What a shame. It is what it is. We talked about the H-1B fee. We can skip this one for now. All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.